Hi friends, welcome to another video in our prediction series. We have identified one long and another shorting opportunity for next week. Aurobindo Pharma is our buying opportunity on which we have an advanced pattern, and Tata Steel is our shorting opportunity on which we have a trend continuation trade. So first let's look at Aurobindo Pharma. Aurobindo Pharma was in a downtrend, making lower lows and lower highs, and this pattern got violated by this candle here. This was our most recent lower high, and this candle here violated this trend. Okay, so after violating the downtrend, Aurobindo Pharma has given us a good advanced pattern in the form of a Gartley. Focus your attention on this portion here. This is where we have our Gartley pattern. Let me draw it for you so that you could visualize how a Gartley pattern looks like. Our X to A leg, A to B leg, B to C leg, and the CD completion at an extension of A to B. 1.272 extension of A to B. So let's draw a line at the 1.272 extension. Okay, so this is our decompletion point on the Gartley pattern. Okay, and this is where we should place our trades. But remember, if we have references, our conviction on the trade increases. So let's see if we can have any of them. For the time being, let me take this drawing out so that you get a clear view of the chart. This is our decompletion point on the pattern. Now let's look for references to support our trade. First, let's see if we have an ABCD pattern, or let's see where the decompletion of the ABCD pattern comes. As you could see here, the decompletion on the ABCD pattern is almost exactly at this level. Okay, let's draw a line there. Next, Fib confluence or Fibonacci confluence. Let's check if we can have any. From A to B, back to A. From C to B, back to C. So as you could see here, there is once again a confluence right at this point, at the 1.272 and 1.414. So let's draw a line at that point and take this off. So what can we conclude from our analysis? The decompletion point on both the Gartley pattern and the ABCD pattern, as well as the fifth confluence, lines approximately at the same point, which gives us this tiny zone from where prices could push into the 0.382 and possibly 0.618 retracement of A to D. This is our Fibonacci retracement from point A to point D. Okay. So now we have our Gartley pattern in place, and from our analysis we have got references to support our trade. Now let's pick our target placement tool and mark our first and second targets. The Fibonacci retracement from A to D point gives us our 0.382 right at this resistance level and our 0.618 at this level. Now let's take this off. Take our target placement tool. Imagining we place the trades right at the opening. In the next trading session, our first target would be this, with a stop loss just below this minor level of resistance. And our second targets would be this, with a stop loss placed at exactly the same point as before. So let's see how this trade plays out in the next few trading sessions. Next is a short on Tata Steel. As you could see, Tata Steel is in a downtrend, and the trend is not violated yet, which tells us to look for shorting opportunities. Fortunately, we have got one on Tata Steel. Let's see how. Focus on this portion here. Prices broke down from this resistance. Prices broke down from this resistance, retraced back into that resistance level, and printed a strong negative candle once again, which gives us our possible trade setup. Okay, so we have our trade setup here, and what we are expecting out of this setup, we are expecting prices to push down into this level of immediate support. So once we have our setup, next is to look for references to support our trade or identify a zone where the prices might drop into. So let's see if we can have any reference to support our trade. There is an ABCD pattern. This is our AB leg, our retracement BC leg, and our possible decompletion would be somewhere around this point. So this would be our D point, and let's mark our D point with a line. Next, Fib confluence. Do we have any Fib confluence? Let's check. From this point to this point, back into this point, and from this point to this point, back into this point. As you could see here, we have a confluence at 1.272 and 1.618. So let's draw a line at that confluence point. And let's take these off. Finally, let's draw a zone at our Fibonacci confluence and the decompletion point. This is our zone where we are expecting the prices to drop into. So next, let's pick our target placement tool and mark our target and stop loss. Imagining the market opens somewhere here in the next trading session, our stop loss has to be just above the most recent high, and our target has to be this. Okay. So let's see how this trade plays out in the next few trading sessions.